Okay, good evening or good afternoon, everyone. Welcome to today's webinar. We have a full house today, which is a really good sign. My name is Athol Norse, and I'm the Business Development Director at Spectre.ai. Today is the 23rd of October 2018. Before we start the webinar, I would like to just do some housekeeping. So can everyone hear me? Please type yes in the chat box on the right-hand side. Okay, so for legal and compliance reasons, I just need to read you guys a disclaimer. So this webinar is recorded. It will be distributed on social media. It may include live trading examples, but these are strictly for educational purposes only. It should not be deemed as investment advice. Spectre.ai as a trading platform is strictly closed to US citizens, and the ownership of SXDT or SXUT tokens by US citizens is forbidden and against the terms and conditions of Spectre.ai. Financial trading is risky and you may lose all of your funds invested. Okay, so now that's out the way for today's webinar. It's going to be the first part of a series of educational webinars over the coming weeks and months. We're going to be doing one a week, and it will be hosted by a very important coach and analyst, which is a well-known figure in the online trading and binary option space on a global level. The main objective and purpose of these webinars is to give our user base more value, to help them to become more familiar with the Spectre trading platform. And whether you're a newbie or an experienced trader, you will walk away with valuable information and trading strategies which should really make you a successful trader over the long term, and also be able to, or help you be able to generate consistent profits when trading smart options on the Spectre platform. I do encourage all of you to stay until the end of the webinar, because we have a special promotion which will be announced at the end. And with that being said, I would like to introduce you to Abe Cofnas. Abe is a 20-year professional trading coach and analyst. He's taught thousands of students around the world on how to recognize trading patterns and signals. And he's also a published author of 5 books in how to combine fundamentals and technical analysis. So, whether you're a beginner or a more experienced trader, you will learn from the series of webinars. And today, Abe is going to be covering, he'll be looking at how you can identify trading setups that are best for every expiration, from 10 seconds trading to end of day trading. He's also going to be touching on risk management that enables long-term success. And he'll also be sharing a get started plan for trading with you guys. At the end of the webinar, we'll have a open Q&A session, which will last for about 15 minutes at the end. Do please ensure that all of the questions are trading related. So with that being said, I'd like to hand over to Abe to kindly take things forward from here.
Thank you very much. And I want to identify, first of all, what we're going to do today, and of course the risk disclosure. We want to give you, Athol has given you risk disclosure, but basically I want to just quickly you to realize that there is risk in the trading, and you need to be using knowledge to give you an edge, and you can read these particular. And that's the whole point about this, is that there is risk, but there's risk subject to skills. So this is not gambling, because gambling, you can't control the odds. Here, you can control the odds by increasing your probability of winning by understanding how to trade. So let's just realize that. So what are our objectives? And over the series, I can't cover everything today, but over the series, I'm going to cover different aspects of how to trade. And this will help you in all trading if you really want to know. How to identify a high probable trade. It's unbelievable how so many traders go ahead and just put on a trade on a whim and immediately look at something, and it just, without the context of what is the market really telling you, what is the emotion of the market. And smart contracts are very much riding an emotional wave. Why is the market moving? Just think about this. And we're also going to learn about risk management, because risk management is staying in the game and learning how to get consecutive wins, and when you're wrong, to tolerate the loss. And it's very, very easy to trade on Spectre AI platform. A little bit about myself. I'm not going to spend a lot of time on this, but basically speaking, I've been around the block. And basically, over the past 20, 25 years, in the beginning of currency trading, I've been around the world, in China and Dubai, in Australia, London, and observed traders and developed curriculum of how to improve trading. I'm going to bring you really the synthesis of what this is about. I'm very proud of the opportunity here. Okay. One thing about Spectre is that it is easily the best platform I've ever seen. And I've seen them all. Nobody is against you. It's instant execution. There is no conflict of interest, and that's fantastic. There's no price manipulation. You could trade any amount from $1 and up, and just instant execution. And that, to me, is very compelling. Now, let's ask the question, what does it take to win? That's in everybody's mind. And I'm going to touch upon these, and I reinforce them. And in effect, this is the core of any trading, any market, not only smart options, but in particular applicable to the smart contracts. You need to know what is a trade signal. I mean, you're not trading randomly. You're trading when you recognize a certain signal. And what is the pattern that is replicable, that gives you a winning trade, and then you look for that pattern again? That's the key. And there are many patterns, but there's some that are better than others and more frequent. So let's do a quick review. So what is a trading signal? A trading signal is recognizing the pattern. It's not simply a generic thing, it's an alignment. It's a specific opportunity to trade. So there's a lot of patterns that you learn, and you know, you don't need to know them all, but and we will touch upon them briefly, and then more in detail. There's a Fibonacci pattern that is very important because markets move in these retracement patterns. There's channels. Channels are really important because when markets are not moving, they're in a channel, and therefore we're looking for that. There's always a next trade. If there isn't a pattern that you want to trade on, it is either forming. There is always a next trade waiting for the pattern to come to you. That's an important point. You don't have to, in trading smart options, you really don't have to look for the pattern. You see it. You see it in seconds. If you're spending a lot of time looking for the pattern, you're making a mistake because it's not there. And this is what I want you to have, that skill set, to be able to immediately, in seconds, see that pattern. Don't expect it to happen right away. but it's not that difficult. Of course, an engulfing candle is an important one, and there are patterns that also then confirming the timing, parabolic pattern and a break of a channel. So we will talk about that. But that's a key to success, is immediately seeing if there's a pattern and what is that pattern. So how do you find a signal? Now, a trade signal is when a pattern is actually forming. It just formed, or it failed to form. There was a failure to break. There was a breakout. That is the best moment to trade this, because smart options deals with direction and timing. And that means you need momentum. You need to be on that wave. When does a surfer jump on the wave that he detects? When it reaches a key point. And that's wave riding is what we're talking about. No matter what you're doing, there is a known moment that you say, this is the moment. And it depends upon how long the expiration will be, and we'll teach you that. But a trading signal is formed when a pattern has formed that you have been looking for. It's there, it's formed, you're ready to go. If it isn't there, you don't do it. Let's take a look. Channel pattern. Sideways channel. Markets are sideways many times. Now, of course, I didn't say whether this is a 5-minute, 30-minute, hour. It almost doesn't matter. I want to make a point here for everybody. When you see a channel, a sideways channel, and the price is in the middle, it is doing nothing. You are basically, there's no break, there's no signal. You are basically a noise trader if you're trading this pattern in either direction. There is no evidence that you are riding a wave. So don't trade this kind of a pattern. But what do you want to do? You want to wait for it to get close to the edge, either above here on top of resistance, or support. Because when it gets close, it either stops and comes back or breaks through. So you know that my next trade on this kind of chart will be when the price is moving towards the edge, and then I'm going to be looking for the opportunity to trade it either on the break or on the failure to break. So for example, let's assume that we were down here earlier, and what you have is the price went up to the resistance and failed. At a certain point, actually, that would be a signal to sell for a certain duration because it failed to go through and turned around. So I'm leading you into a concept of trading that is absolutely beautiful because it's actually your criteria. You don't have to chase the market. It comes to you. So here's an example. Okay, everybody listening carefully and seeing the screen? I assume so. And Atul, if there is a particular issue, just chime in and say, Abe, we don't see you. So I'm assuming the sounds of silence is confirmation. So here is a 30-minute pattern presented. It's an excellent short signal for end of day. Now, why do I say that? Look what happened. You have these, each candle here is 30 minutes. It breaks support. Notice something. Notice that it breaks support, and then another 30 minutes, it tried to go back up and failed, and then breaks again and keeps going down. And the entire time it tried, there was only one attempt to go back up to support. So This is a kind of sell either on the breaker support, but you give it time. On a 30-minute pattern that you're looking for, give it, you could do end of day expiration. And it's a very reliable time frame, because at end of day, it's very hard for the market to take the energy that it's had, which is 1, 2, 3, 4, 5, 150 minutes, 2 hours of energy, bearish. This is not a bullish potential. So basically speaking, you catch the breakdown, gives you a very good end of day. And I suggest that in getting started, one of the things I want to give you an early tip on is to get started with putting on different time frames, expiration times, 30-minute. Put on 10 trades of a 30-minute pattern. So you get to see if you're really good at it. So you don't really want to jump around in training to go only 1 minute and then only one type of expiration. You want to get used to different patterns for different expirations and get yourself practicing doing that. And we'll talk about risk management on that. But the break of a 30-minute pattern means there's a lot more stability in that direction of the break than a 1 minute or even a 5 minute. So I kind of I've seen great success in end of day trading. Great success, because everything is on your side if you catch the combination, the alignment. And here what we had is a break for a reason. And then there's always an attempt to reverse that break and the failure. So not only do you have an opportunity on the trading at the break, you can also trade wait. Look at the candle that came afterwards. It broke again. And that means end of day was very, very much in the cards. So think about that. Here's a 1 hour support on the GBP that, again, a 1 hour is a little stronger. It's like a real stronger level of energy needed to break. And a 1 hour break was followed by a small attempt to get up, back up, and then continued. Now notice something. I don't want to go and we'll look at a 1 hour chart and only trade for expiration of 1 hour. You gotta give the opposition, you gotta give the bulls a chance to express themselves. If it is a sentiment wave and it's a bearish opportunity, the momentum is on the bears here, then therefore you want to realize that the other side will fight back. So you give it more than one. I like to give it 3 or 4. So that means you have a 1 hour support. You could do an end of day, or if you can you could do a custom 4 hour. Give it time. Now, a lot of traders don't give it enough time for the opposition to trade. This is combat, people. This is boxing, bulls against the bear. There's going to be a counter punch, the failure of the counter punch. This is what this is about. It's expectations. When you're expecting a short, also expect that there's going to be an attempt against you. Okay? It's going to be against you, and that means you got to give it time to move and not panic. I hope I made that point really clear. So one of the key points here on tactics is whenever you're entering a trade, give it, especially on like a 1 hour time frame, give it multiple times, give it several hours, 3 or 4 hours to work its way out, walk away. That's a kind of trading that's very, very possible, and it's beautiful. Now, we get to something that over time we could get a lot more into, but the markets do have Fibonacci patterns. It's not a signal, it is a map. What happens is the market goes from a high to a low and then tries to come back. Remember I was telling you that the energy is, there's going to be a counter move, and yes, there is. And basically, you can wait for the counter move, and it's going to usually stop at a fib point. Here, it went from, it is a 15-minute chart, went from a low and then up to and stopped magically, so to speak, at a 38.2 point. It just can't get beyond 38.2. Doesn't mean there's a signal here. I'm just showing you that understanding the fib boundaries gives you a point to trade. So for example, what you would do here would be you would be waiting. And since the direction is down, you want to wait for it to fail and come back and then break down here. You don't want to trade in the middle of a range. You want to trade when a break occurs. The fib point gives you an aha moment. Hey, wait a minute. It is not likely to go back up. It's had a lot of attempts here. Many. Over 10 attempts to try to get above 38, and it didn't do it. You're going to find knowing the fibs will give you, and putting them on as a tool, will give you a very good location for your next trade. And my next trade here would be not going up because I think the evidence is that it's bearish, but coming down and either wait for it to come and break through a new low. So sometimes there's waiting. We're waiting for the market to come to you. And fibs are very useful in this. Just one second, let me get back up. Now, you're going to see a gaps. And this is very exciting. Usually news generates a gaps, or it comes from over a weekend period. You have a gap up here. Well, a gap up means there's some new information that has moved this up. Now, very different than equity trading, because usually gaps in equity are coming down. Now, in this case, they usually, and it's important to know news, and we'll cover that, why it went up. But when a gap occurs and you caught it on the first, this is a 1 hour, you caught it, it's usually an indicator that you trade in the direction, as long as you catch it in the beginning of the gap. It's a strong signal for direction. Trade in a relationship to the gap, unless it proves to you that it's coming back down. But it has to be proof. The price has to break down. Otherwise, it's going to continue to go for a reason. Again, evidence-based trading. That's what we're doing. Let's do some more. This, I have to say, the parabolic path is beautiful. It is one of the most important directional signals that you could do on the Spectre platform. The reason is when it occurs and you have it's very difficult to stop unless it achieves an angle. Look at the energy here. There's a break. Now you don't know it's parabolic when it's a break, but you can enter in the third and the fourth. High confidence, it's continue to go. When do you not trade a parabolic in that direction? When it reaches a 90-degree angle. It's hard to maintain. So what you have here is you look for a parabolic, and a parabolic, even at the 1 minute and 5 minute level, in the early stages, you join the crowd. The early birds are trading here in the first one. Then money comes in, and then the greedy guys are coming all the way at the top. You don't want to do that. And you don't want to trade the other side. It means it's going to stop. You have to wait. But I like a parabolic very much. For example, that's the one you want to do like in 10-second to 1 minute trading. A parabolic, catching in the parabolic, it's likely to continue. So I like that for the very short-term trading. A parabolic opportunity will improve your ability to have a win, because the energy is maximum right after when it starts that curve. It's like a car driving 90 miles an hour on a curve. It cannot straighten out so easily. So I like the parabolic very much. Now here's a 1 minute candles confirming momentum and 1 minute expiration. 1 minute candle, and you want to go for a 1 minute expiration. Okay? And here again, our beautiful location, the break. The break, it breaks down, and at the break, you see where the yellow is? The yellow, I'll go back, let me go back. The yellow is at the break. When the net, you don't catch it on the break. When it's confirmed the price is going below the low, previous low, you could catch that. And these are 1 minute candles and doing very well to confirm your trade. And that's a really good location. Now on the break, you're kind of guessing, aren't you? If the price goes below support, you're not confirmed. You're guessing. So therefore, we have to get a confirmation, wait for the minute candle to close, and the next one coming down. And that coming down below, and that gives you the angle to come in. Now let's take a look at the best pattern to trade expirations of, let's say, a 5 to 15 minute expiration. Again, you got to give things time. So you want to, when you're looking at a 5 minute expiration, 15 minute expiration, then you really want to be on 5 minute, you want to use the 1 minute. On 15 minute expirations, the 5 minute is fine. So you want to, again, give it time to express itself. So here is a break of resistance, and these are candles that just keeps going. And this is the general point I want to make. How do you win at smart contracts? How do you know that you got an expiration that's right? Because it's not simply the expiration. It's in relationship to the strength of the break. If you are a 5 minute candle pattern, then the strength is not as strong as a 15 minutes, so you need to give it time. So you learn, you match maybe 20 minutes for a 5 minute candle pattern, an hour, even 2 hours for a 15 minute. But that's, you don't really need to think more than give it more time. And that's the kind of lesson that I've seen. A lot of traders are right and wrong at the same time. You're right to be in the direction, but the expiration got you. Only if you would have waited another 10 to 15 minutes, you would have been right. I'm sure you've had those experiences. The fact is that that is common, because you're not giving it enough time to breathe. This is part of the energy of the market. As I said before earlier, I want to say it again. A really good way to get started is learn the end of day, because the end of day pattern is a highly winnable, high probable winning expiration, because you're looking at 30-minute and 1 hour patterns, and a break of a 30-minute means it's not going to be that easy for the market to reverse that 30-minute break, and certainly an hour break. So that's one of the things that I like to make a point about, is if you haven't experienced the end of day, try it out. It helps you put some money on the profit side. Now, one of the things I will talk about over time is the specifics of trading news, because you know the market news is like a rock thrown in a lake. It causes a wave. Sometimes it's a small wave, sometimes it's not. And here's just a quick example. I saw a trade when really good winning trade we put on when Trump held a news conference on the U.S.-Mexico-Canadian trade agreement. And Trump was talking and markets selling off. Well, you know, here's a 1-minute pattern. Here's talking at that first, it starts breaking down. I put the trade on and let it work. And this is about a 15-minute position for a 1-minute expiration, a 1-minute trade, 15 minutes. Give it time to work out. It just tried to come back up, didn't happen. But sometimes when you learn the break of a news event, usually the initial reaction is going to peter out, but it's moving for a reason and you just want to go with that wave. Now, let's do a little bit of a real-time scan, okay, of markets, and let's see if there's anything going on here. I want to make sure you understand that any trades, if I do a trade, it's instructional only and they're not recommended to be followed. It's for instructions. And many times I'll put a trade on knowing that it's not a good trade, just to prove that that wasn't a good pattern. And these are important things for you to realize. So I'm going to change the screen. Okay. Now, here is dollar yen. Just going to quick scan and I'll show you how I look at the market. So let's go first start with the day. And this is a Bollinger Band, which I think is a very effective way to take a boundary. And there's some really great Bollinger setups you will learn. So here's a trade. Let's see if we have a trade. First thing, the day is obviously, it's going from one side to the other. There was a break, and the market, dollar yen, the yen is getting stronger, and it's trying to get up. It's failed, and it's beginning to come down. Is there a trade right here? I wouldn't take it right now. I'm getting the feeling that this is basically a short. Hope you all agree. Let's just scroll down a little bit more. Let's go down to the hour. Aha. And look at the hour where it's hugging the lower band. It tried to come up. Remember, I'm telling you, this always happens. It tries to come up and fails. Here's what I would do. This is a pattern here on the 1 hour, which is it's hesitating. It's trying to come back even down further. Let's go down even further. Just want to realize that this is something you scroll down. Let's go down to the 15-minute. And you can see it's trying to come up. The general mood is down. It's trying to come up. I would not be buying it. I wait for it to come down and hit a new low, break down, then I would be selling it. Not yet. So I'm taking away that trade. I won't do it. Let's scan. another one. Let's scan GBP. There's a lot of volatility these days on GBP doing the Brexit issue, and you just take a look at something. Okay, here's the day GBP where it's going from an upper band to the other side. Look at it, tries to come down, turns around, and at this point, this was a really nice get out of the way, end of day, buy. It's not going to come back. It turned around, comes back up, turns around, and now what do we see? Well, it's probing the support. So it's having a hard time staying, but it may very well be bouncing like a Z in the band. So I need to scroll down. Let's go down to the 1 hour. Aha. And the 1 hour, what we see here is a really high. It came up above it, coming back down. And it's going to be really hard for it to come right back up again. But I want to just, before I do that, there might be a trade here that I would put on as an example. But let's go down to the 30-minute. I want to get more. Oh, look at that. See, it came back down, comes back in here, and this is now coming down. I would take this trade for, well, if it's only 30 minutes, I want to go lower. I'm going to go to 15 minutes. This is real. Okay, 15 minutes. Okay, this is a decent opportunity. There's been a failure to come up. It's approaching, consistently coming down. This is a kind of trade that you can put on. Again, this is a hypothetical trade. And I like to do 1%, really small. Try it out in the beginning. And we want to take, since it's a 15-minute, we're going to take a 60-minute position because I want to give it time to work. And this is a 1-minute review. But if you go back here on the 15 minutes, it's looking to break down. The energy is down. I want to go with it. This is I would rank this trade as like a 3.5, 5 being the best. It's worth trying at a small risk. And this is one of the things that I want to tell you, that trade. The way you learn is to trade. You don't want to risk your whole account. You want to take a risk of maybe 1% per trade. This way, if you did 50 trades, you only have half of your account left. Don't blow it until you, and also give yourself the right to be wrong and learn why you're wrong. That's really important. Let's go to one more. Okay, I'm going to do one more. And we're going to go, well, 2 more. I want to go to Euro, and then I want to do a Bitcoin. And here's the Euro, and I'm going to go to the day first. What's going on? What's the overall? Well, take a look at this. The Euro is not happy. It's just bottom fishing. I'm not sure what I would do yet. I'm not sure at all until I go lower. Now let's just jump down. See, it's trying to go up. It's failing. But there's too much noise going on. And I don't see, let's go to 15 minutes. Right in the middle of 15 minutes. No trade, guys. This is just not worth trading. Next one. Let's go to one more. Let's go to Bitcoin. We can see that in Bitcoin, it's absolutely in the middle. It's just staying there. There's very little movement. That gives you a sense of the wave. Is there a wave? This is still waters. But even in going down to the 1 hour, again, very too choppy. You don't see too consistency. So you don't see that. So my view here is that we don't have those trades. So let's trade here at all. Sometimes the best trade is no trade. So let's go down and resume here. Some get started tips. You can see how exciting this is. You know, once you understand this, wow. In starting, achieve certain milestones. Try consecutive wins. Could you get 2 in a row? And then could you get 4 in a row right? This is an important first attempt when you're out there. How many in a row can you get right? Now, that means how many in a row of trades, but also of expirations. So if you try the 1 minute, 10-second expiration, which I think has a different kind of trading, and I'll focus on that at a different webinar, but you want to get consistency. You want to be able to see, are you good at getting 3, 4, 5 in a row right? Because that's important. And if you got 2 in a row wrong, okay. But once you get 3 and 4 in a row wrong, there's a warning sign. Maybe that expiration is not that good for you. Focus on a favorite expiration. You find one, now you're getting the best out of it, and stick to it. Every 10 trades, review what you've done. Now, in the risk per trade, I would risk only in the beginning 1% of the account per trade. This allows you to learn without fear. It's very important. So, thank you for attending. Future webinars will cover other aspects of this. You can see we're just scratching the surface. And now I could answer any questions that maybe have. Atol, go ahead.
Yeah, thanks for that, Abe, for a very informative and energetic presentation. So as Abe mentioned, what we'd like to do now is just open the floor up. If you've guys got any specific questions for Abe, now is the time. We've got about another 10 or 11 minutes. So please just drop your questions, if you do have any, in the question chat box. And Abe will be more than happy to answer it. Abe, can you see the questions as well, or I'll pick them out and I can just read them to yourself?
No, I don't. Okay, wait a minute. I may be able to.
Okay. Don't worry. I'll say the questions. And okay, so here's one for yourself, Abe, for trading from Gabriel. For trading 10-second or 30-second expires, what time frame chart do you recommend to use?
The best approach is a minute, and try to, again, the important thing on the 10-second and less is you want to catch the very near-term momentum. So it's a 1 minute pattern, and the 1 minute pattern has a kind of break that has occurred. You could go ahead and just catch it. You're basically jumping on, you're jumping on the bull or the bear and holding its tail. But you don't, the big picture won't matter. So I would say the 1 minute pattern.
Okay. We've got another question from David, Abe. He's asking, what time is end of day? What time zone do you use?
Atol, I think end of day is end of the London session. I mean, depends on Atol. You might have an answer specifically. Usually, it's the end of the session that you're in. But technicals could give an answer on that one. I think I want to be accurate.
Yeah. Okay. I'm not too sure the exact answer to that, to be honest. Exactly what time zone we're using. So we'll come back to yourself on that, David.
It certainly is. I think it certainly is several hours from beyond where you're trading. So the end of the session that you're in, I believe. End of week would be it's a custom time frame. So that's something we probably need to find out for sure.
Okay. And a question from Wilfred, can we receive a copy of the webinar to replay? Yes, Wilfred, we are making a recording of this and we'll share it on our social media channel. I've got a question for yourself, Abe, from Dirk. Dirk is asking, is there a first rule about expiration time related to chart time?
Yes, I mean, I would say that, yeah, again, the point that I was focusing on the relationship between expiration and chart time. I would say it's 3 or 4x. If your chart is on 5 minutes expiration, you want, because you want to give it time. If your chart is 15 minutes, then you got yourself a, 2-hour expiration. You need to give it time. So I didn't quantify the exact, but it certainly isn't 1-to-1. A 5-minute X chart is not, you do not want a 5-minute expiration. So it's 3 and 4-to-1. A 30-minute could actually be end of day. An hour could be end of day. So it gets, because the strength of the move is stronger. It's harder to reverse a 1 hour than a 5 minutes. But each time you trade, expect the enemy, the opposite direction to happen, but to fail. You got to give it time to try. Good question.
Okay. Leslie is asking, I missed most of the webinar. Will a replay be available? Yes, Leslie, as I've mentioned earlier, the webinar is being recorded and, we'll share it on our social media as well. Okay, we've got a question from Brian. Thank you, Ethel, for yourself, Abe. Will there be a close early option for trades if a trader would like to capture some earnings as the trend does their way? Yeah, I'll answer that. Yes, Brian, we are going to be launching early closeouts, which will be coming soon. And, when we do launch that, we'll certainly make an announcement. We have launched capital protection, which is live on the platform, which is different to early closeouts. And on the capital protection, as a trader, you can basically decide before you go into the trade how much % you would like to protect, so that if in the event you are wrong, you do not lose 100% of the amount that you wagered on the actual trade. And in return for that, you're obviously taking a haircut or a lower percentage on the total payout. But early closeouts is coming very soon, so stay tuned. We'll definitely make the announcement when it is ready, Brian. Got a question for yourself, Abe, from Jan. He's asking, how do I choose the right expiry time?
Okay, the right expiry time differs among different people, right? There isn't like the best expiry time. It's the right expiry time will be the one the best at, because one trade in 1 minute and then another one on the 5-minute expiration and another one on the 1 hour, and you're all over the place. You got no evidence of what you really, because people will go to different things. It's a relationship between you and your rep. You do 10 trades in a row and you're doing better on a 30-minute versus a 5-minute. Stick with what you're getting good at. And I find this issue at all is that traders themselves a training period, they are experiencing what they're really good at. That's like, are you good at walking? Are you good at running? Are you good at a marathon? What are you really good at if you do physical exercise? You need experience in that. So you put on trades, put on 10 trades in each expiration, and then you're going to find very quickly which one is better for you.
Okay. Thanks for that, Abe. Last question from Rav for yourself, Abe. How many trades would you say is suitable to place per day to keep risk management at low risk for beginners. Example, now if I had £1,000 to play with.
Well, okay. Listen, as I said, the risk per trade in the beginning should be low enough to give you more trades, so that you're not you're wrong, because you don't really know enough. So I would say if you do 1% or 2% risk of your account per trade, then you're going to have, then the opportunities are there 10 trades in the day, because there may not be, or there may be a day of great markets and you could do more. But I would say the real issue is not per trades per day, but the risk per trade. With a 1%, start with, then graduate to 2%. And I think that gives you the beginning kind of draw, not too fast. And I think the opportunities per, there's a lot of trading that people realize. And once you realize where the patterns are, there's end of day trades, there's breakout trade. There's easily 10 trades per day if you do a different type of expiration. High points that give you a chance of getting 8 out of those 10 right.
Okay. Thanks for that, Abe. Abe, can you make myself a presenter? I just need to show my screen. So, guys, listen, as I've mentioned earlier, we are going to be doing more of these webinars. Abe will be doing one a week in the coming weeks and months. So, he's got a lot of material that he's going to be covering. If you guys got any questions that you would like for Abe, by all means, just email support. And, we will, just bear with me for 1 second. Okay, yeah, email support, and we'll get that questions over to Abe. Once we finalized the next webinar date for next week, we'll send an email out. By all means, you guys are more than welcome to attend, and definitely help share the webinar invite with your friends or trader friends. We really appreciate that. As I've mentioned to yourself, we've got a special promotion, and what we basically would like to do is, for all of you users which have not opened or got your account verified yet, or have not deposited, we basically want to offer you $100 bonus, deposit bonus worth of Ethereum into your live account, so you guys can start trading and getting familiar with the platform. In order to claim the $100 bonus, all you need to do is email support@spectre.ai. Just quote the code, which you guys can see on my screen. You might want to write that down, PR829. Make sure you do that in the next 48 hours. Just email support. Make sure all you need to do is, after that, make sure that your accounts are fully verified. And once it's verified, our support team will deposit the $100 worth of Ethereum into your trading account. And you guys can start trading immediately and putting into practice some of the information which Abe has shared with yourself. So happy trading, guys. With that being said, thank you so much for your time. Abe, thank you so much for your time. Again, if you guys got any questions, please email us, and we will certainly be in touch next week with the date of the next webinar.
Welcome. See you next week. Thank you.
Cheers.